Morning, class.
Morning, Miss.
Hope everyone is doing well. So, my name is Miss Anderson, and myself and Miss Welch will be teaching you today. Before I introduce today's topic, I will give you a scenario. Imagine you're an accountant for a small business. You've been working all month recording every transaction. You add all the money in and all the money out, and they don't match. Today, we're going to learn about a tool known as trial balance and help accountants catch this mistake before it becomes a big problem. So today we'll be looking at the definition of a trial balance and the purposes. And Miss Welch will demonstrate to you how to prepare our trial balance. So, what is a trial balance? Jack, please read.
Trial balance is a list of all ledgers accountants with your debit and credit balances prepared at a specific date to check arithmetic accuracy.
Okay, very good. Before I move on to explain the definition, money in is the debit and money out is the credit. So think of a trial balance like a checklist that keeps track of all the money in a business. It lists every account like cash, expense, and sales, and lists the amount that is in each at a certain time. The main goal of a trial balance is to make sure the total debit equals to the total credit, and that everything is correct and balanced, following the double entry rule. And that rule basically states that assets and expense increase on the debit side, while equity and revenue increase on the credit side. That was a lot. Anyone have any questions, any clarifications?
Oh, Miss.
Okay, seems like everyone understands. So we're now going to look at the purpose of a trial balance. We have verifying accuracy, error detection, and foundation for financial statement. Before I give the explanation for those points, I'll read some scenarios. You will tell me which one you think best suit the purposes. Jack, please hand me the handouts.
Okay, miss.
Thank you. So the first one reads, an accountant finds a purchase of 3,000 was accidentally recorded as 30,000 and corrects the mistake. Which one of these purposes do you think best suit the scenario?
Miss.
Yes, Susie?
Error detection.
Very well. The next one reads, a small business owner prepares a trial balance to ensure all transactions are recorded correctly before moving to the next step. Jack, would you like to make an attempt?
Miss, can you please read over?
Jack, you need to pay attention in class. A small business owner prepares a trial balance to ensure all transactions are recorded correctly before moving to the next step.
Verifying accuracy.
Very good, Jack. And the last one reads, after preparing a trial balance, a business uses it to create an income statement. Susie, would you like to go again?
Award foundation for financial statement, Miss.
Very good. You guys did well. So, verifying accuracy. Think of it like a math check. It makes sure that all the numbers entered into the accounting system adds up correctly. Specifically, it makes sure that the total debit equals to the total credit, and that which is basically money in and money out. Error detection. If the debit and the credit side don't match, let's say for instance, if the debit side is equal to 17,000 and the credit side equals to 15,000, that is a red flag. So the trial balance help account to find those mistakes in their records. Let's say for example, like the wrong amount entered or a missing transaction. Foundation for financial statement. So the trial balance provides a summary of all account balances, and this summary now is then used to create financial reports like income statement or balance sheet. So the trial balance basically acts like a stepping stone for creating those reports. I will now hand you over to Miss Welch.
Good morning, class. My name is Miss Welch, and I'll be taking over from Miss Anderson. Like she explained, what is a trial balance and the purposes. I will be doing with you the preparation of a trial balance. Like Miss Anderson said, a trial balance is a list of closing balances from the general ledgers. But I think the preparation is a bit more detailed. Now there are 3 columns in a trial balance. There's the name of the account, which is under the name particular, and there are 2 sides where numbers or amounts will go from the accounts. What do you think are those 2 sides? Real.
Debit and credit.
Debit and credit sides, right? The debit side, and what do you think will be on the credit side? So that'll be, what would be on the debit side?
Assets.
Assets, that's 1. What do you think would be on the credit side, Ria? Expenses on the credit side? No.
Income.
Income would be on the credit side. So Alice, thank you so much for your contribution. Debit and credit. On the debit side, there would be expenses, losses, drawings, and I'm missing one. Which one am I missing? I said expenses, drawings, losses,
Assets.
and assets. Credit side, liabilities, income, and
Capital.
capital. What's another word for capital? Equity. Another word for income?
Revenue.
Revenue. Alright, so now that we know both sides are debit and credit, which side goes on the left and which side goes on the right?
Debit go on the left hand.
Debit goes on the left and credit goes on the right. So it's debit then credit. Particular, debit then credit. Alright, so now I'm going to show you guys a video on the preparation of a trial balance. Alright, so now I'm going to play the video. Please pay full attention because I will be asking questions after. This video will show you how to prepare a trial balance, what side goes on the debit, what side goes on the credit, and the accounts that does that. They will also tell you when an asset is increased, what happens, so when an asset decreased, what happens. Same goes for liabilities, alright? Alright, you can play the video now.
In this video, we will see how to prepare a trial balance. A trial balance is a list of closing balances of ledger accounts for a certain date and is the first step toward the preparation of financial statements. A trial balance is prepared to check the mathematical equality of accounting. Under the double entry system, this equality occurs when the sum of the debit account balances equals the sum of the credit account balances. To prepare a trial balance, all the ledger accounts are closed at the end of an accounting period, or when a column for account names, a debit column, and a credit column. Ledger balances are posted into the trial balance depending on the nature of the accounts. Assets, expenses, and drawings accounts are recorded in the debit column as they have a normal debit balance. In contrast, liability accounts, equity accounts, and revenue accounts are recorded in the credit column as they have a normal credit balance. A trial balance only confirms that the total of all debit balances equals the total of all credit balances. Debit and credit totals may agree in spite of errors. If they do not agree, the differences must be investigated and resolved before financial statements are prepared. Let us now look at an illustration to see how to prepare a trial balance. The details from ledger accounts of Riley Company on December 31st.
Alright class, so from the video before this, they had a picture. What did they say? The two balances must be equal, right? So if one side is not equal to the other side, can it balance? No, it can't balance.
The ledger accounts of Riley Company on December 31st for year 1 are given. Using this information, we are required to prepare a trial balance. In preparing the trial balance, we first list the name of the company, the title of the statement, and the date on which the trial balance is prepared. Next, we'll list the account names and their balances in either the debit or credit columns. The ledger accounts that have a normal debit balance are entered in the debit column, and the ledger accounts that have a normal credit balance are entered in the credit column. Let's first list assets in the debit column. Remember that assets have a normal debit balance. So we have cash of $11,000, accounts receivable are $13,000, supplies of $11,000, and equipment of $92,000. Next, we list the liabilities in the credit column. Remember that liabilities have a normal credit balance. In this case, we have notes payable of $30,000, accounts payable $18,000, and salaries and wages payable $13,000. Next, we list owner's capital and equity account, which amounted to $35,000 in the credit column. Remember that owner's equity is a normal credit balance. Then, we list owner's drawings of $13,000 in the debit column. Remember, an owner's withdrawals decrease owner's equity. Finally, we list all revenues and expenses accounts. Revenues have a normal credit balance and expenses have a normal debit balance. We list service revenue of $93,000 in the credit column. Then we list rent expense of $6,000 and salaries and wages expense of $43,000 in the debit column. After listing all respective debits and credits, we'll total the debit and credit columns of the trial balance. The total balance of the debit and credit columns each is $189,000.
Alright, good. So as the video explained, what's the first step in drawing a trial balance or in the preparation of a trial balance?
The name of the company.
The name of the company. That's the first step. And then what's the next step?
Trial balance.
Trial balance and then the date. Then you draw up the debit and credit side. Right? So what was the first entry? Cash. Where did we get cash from? The accounts ledger. Right at the top here, general ledger. This is accounts taken from the ledger of Riley Company at December 31st, year 1. So they got cash here. Cash, where's cash? Cash at the top here. The amount for cash is $11,000. It's debited, right? Cash is debited. Why do you think it's debited? Why do you think it's debited? Is cash increasing or decreasing? When cash increase, it is debited. Right? And when it decrease, what do you think could be? Credited, right? Then we have accounts receivable, supplies, equipment. Alright, let's look for our liability. We have rent expense, that's an expense. Okay, we have capital here. Capital is on the credit side. Do you think capital is increasing or decreasing? It's decreasing because it's on the credit side. Alright. Alright guys, so that's basically it on the preparation of a trial balance. Any questions?
Yeah.
What question do you have?
Miss, if cash increase, it is a 7.
Is it a debit entry or a credit entry? Okay, if cash is increasing, that is more money coming into the business, right? So that would be a debit entry. Any other questions? Bank overdraft, if it's what? Increase or decrease? If bank overdraft decreases, that would be a debit entry as well, because it's less money you're owing. If bank overdraft increases, it's going to be a credit entry. Right? Alright. Any other questions? Alright, now I've it on the preparation of a trial balance. What is a trial balance and the purposes of a trial balance. Now we're just going to do a little activity just to end off the class. We're going to do a true or false sequence. So I have 2 questions here. You're going to tell me whether it's either true or false. So number 1, we have a trial balance can be prepared at any time of the accounting period. Is that true or false?
True.
It's true, correct? And lastly, if both sides, debit and credit columns in a trial balance are equal, it is guaranteed all entries in the ledgers are correct. Do you think that's true or that's false?
False.
That's false, that's correct. Alright, well thank you so much for being in my class and thank you for your participation. That would be the end of my class.